Hello traders, the title of the video is a zigzag pattern. Elliott wave trader answers a specific question about the zigzag pattern. Alright, so we know that the structure of the zigzag pattern is 1, 2, 3, 4, 5, 1, 2, 3, 1, 2, 3, 4, 5. So if you are a new trader, you may be wondering, what are you talking about? 1, 2, 3, 4, 5, 1, 2, 3, 1, 2, 3, 4, 5. We are talking about the internal waves of the zigzag pattern. So the zigzag pattern is ABC pattern, all right? So the first part is A, which is subdivided into 1, 2, 3, 4, 5 waves. The B part of the zigzag pattern is formed of 1, 2, 3. And the C part of the zigzag pattern is subdivided into 1, 2, 3. So there was an excellent question by one of our subscribers that was asking a question: how to can we avoid an Elliott wave, a trading mistake? So for those reasons, alright, I am busy recording this video today. As I always say in my videos, that if you put your question or suggestion, I will be busy answering your question. So I hope I have understood your question. If I did not understand your question, please correct me again in the comment section so to clarify your question. All right. So you say, could you suggest a method to defend from the situation described about the zigzag in wave 2? All right. So the person who answered the question is Andrea Sioni. Hope I pronounced your name correctly. So I put here my answer to you was: thank you for asking a very important question. I will be posting a video that will answer your question. Happy trading. So this is what I'm doing here. So now there is another gentleman here, Mr. I don't know whether it's lady or a man. So real world example. So what I would suggest, I don't want to guess your question, but I want to get it right. So what I would suggest to traders is to say, you may start like this: George, you said in the video blah 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 X, all right, and I want to know this. So you are refreshing my memory about what I've said in that video relating to one specific topic, and then I will try to, so this will refresh my memory, but okay, I said that in that video because I'm recording videos all the time. Sometime, what is happening, I recorded a video maybe 5 months ago or a year ago, then somebody watch it, and ask a question. But in that case, you need to quote what I said in the video. Say, George, in that video you were saying this about this. So this is to gather information for me. So from your question straight away, I can know what you are talking about. Otherwise, I have to go back and watch the video and say, why have I said that? Okay. So try to quote me what I said, what I've done, and then to refresh my memory. And then from there, all right, ask your question. So like now it's a real world example. So now I may come up with different interpretation of what you meant by this question. So if you are YV Kids, would you mind to give me more details about what you want to ask in this question? So that will help me to answer your question. So here the gentleman asked a clear-cut specific question. I think I understand that question. If not, correct me again in the video that I'm about to record, okay? So let's go back to our chart now. With my understanding of your question, to recall what I've said in that video relating to the second Elliott wave, all right? It has sometimes traders, during the second Elliott wave, they will buy because the price will pull back like this, all right? So they buy here, okay? Or they will buy during the B part of the zigzag pattern. So price start going up. People say, okay, the third Elliott wave is underway. But then suddenly, probably you buy it. You didn't buy it here, but you buy it instead here because you say that, okay, that's the first wave. Joe, you can see clearly that's the first wave. You identify. That's nothing wrong. You got it right. The first way is correct. Now you are so desperate to catch that big portion of the third area wave as a swing trader, as a position trader. You are salivating, all right? You are thinking of all the money. So you want to catch that third area wave. Probably you say, okay, I don't want to miss it. I want to buy. So you bought it here. Oosh. Bought it here, but now price start going down. You say, oh, Joe, your area wave is so useless. All right. So this is a typical situation that arises when traders are dealing with the second area wave. All right. So traders lose. It's not because their wave count is wrong. They identify the first wave. They know that the second wave is standard wave, but they think that the second area wave has ended here. But instead, it formed a zigzag pattern. So I believe that was the question Andrea Sioni was asking here. So how can we, could you suggest a method to defend from the situation described about the zigzag in wave 2? If I'm correct, that's correct. So there are a few things that can help us to avoid that trading mistake if the second wave is a zigzag. So do not be surprised. There are other trading area wave practitioners out there that will say zigzag does not form in a second area wave, George. You stupid boy, where do you lay your area wave from? So all I will do, I will just smile. The reason why I will smile is that I never say never in a financial market. So this is what I've seen in the market. So you learn it, so use it as a guide, but I never say never. So when I hear the word never, I just smile because strange things happen in the financial market. So that's the first thing you want to know. So to avoid that trading mistake, there are some information. So we know the zigzag pattern. So probably one thing that can help you to avoid that mistake is that the A part of the zigzag pattern may exhibit its internal wave. What do I mean? So for instance, you see here, after your first area wave, you see it come down 1, 2, 3, 4, 5. It's a corrective wave. By corrective wave that is subdivided into 5, if it's not a flat correction, if it's not a C part of the flat correction, the first thing that should come into our mind is that, guys, be careful. There's a high chance that we may have a zigzag pattern. So if the A part of the zigzag pattern is subdivided into 1, 2, 3, 4, 5, as an area wave trader, you should be alerted that there's a high chance that we may see a zigzag pattern. Because 1, 2, 3, 4, 5, corrective wave, if it's not the C part of the flat correction, first thing that should come into our mind, that we may have a zigzag pattern. So if you decide to buy it here where my cursor is, you know that the second part of the zigzag pattern may be subdivided into 3. So for swing trading or day trading purposes, you may participate in the B part of that zigzag pattern because the first part of the zigzag pattern, the A part of the zigzag pattern, is subdivided into 5, alerting you that there is a high chance that we may have a zigzag pattern. So as an area wave trader, you are ahead of the market and you know that that structure looks like a zigzag pattern. So, but do not assume that definitely it will be a zigzag pattern. All right, do not assume that, okay? So that's the first warning, okay? The second thing that you can check, so suppose it came down like this, down, you didn't pay attention to the internal wave of this move down, or it's not even clear. The internal wave of the A part of the zigzag pattern was not even clear. It just came down, shoom, choom, 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 down. You went to the lower time frame, you can see the internal wave, there's nothing you can do. Okay, all right, now you are here at the support level, you implement your top-down trading method, you are ready to buy the third area wave. You bought it here. Your stop loss is somewhere below here, all right? So you are happy. So price going up, you see now it came down, it start going up. But this session is formed of 1, 2, 3. That's another warning for you. You enter the trade carefully here. Use your top-down trading method. You are in a trade. Now, but there's another warning. If this move up here is 1, 2, 3, you need to secure your gain. So you bought it here, you see going up 1, 2, 3. Move your stop loss. Secure some of your gain. If it happens to be a zigzag pattern, well, you will be close with profit. So the first part of the zigzag pattern, if you can see the internal wave, that's the first warning. That is not finished yet. That second area wave, that second area wave is likely to be a zigzag pattern. Or suppose you bought it here. But the second warning that can tell you that it's likely to be a zigzag pattern is the structure of the B part of the zigzag pattern if it's subdivided into 3. Secure your gain. Or another thing that can help us, as the gentleman put it, to defend, I like that word very much, be a defensive trader. Very nice word, Andrea Sioni, to defend from the situation. All right, I like that. I like that. Okay, you want to defend your positions. Okay, so, all right. Okay, so the third thing that we can do, so the first part of the zigzag pattern can help us. The second part of the zigzag pattern can help us. All right. Now, there's another thing that can also help us. Think of it. The second internal wave of the first wave can also help us. Why? Because we use the internal waves of the first wave to forecast the whole multi-wave. And the real second area wave often, not always, often depicts the structure of the second internal wave of the first wave. So if we can see the internal wave of the first wave, we need to check the structure of the second internal wave of the first wave. Doesn't mean that the real second area wave will do exactly that. It gives us a bit of idea that the second area wave may replicate the structure of the second internal wave of the first wave. So that can also help us to have a bit of idea what is likely to take place in the second area wave. That's the third thing, to defend ourselves. I like that word very much, to defend ourselves, because we are ready to catch the third area wave. This is quite annoying because you see the first area wave, you know now you are in the second area wave, but you're going to lose. It's not very nice feeling at all. You don't want to lose at all. You want to catch that your third area wave carefully. That's why I like this question very much. Okay, so that's the third thing, using the second internal wave of the first wave, if we can see it, if it's there, to have a bit of idea what is likely to take place during the real second area wave. All right. Another thing that we can use is the characteristic of the financial instrument that we are using. What do I mean by that? Blah, 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 George. Okay, all right. Characteristic of a financial instrument, George. What do you mean by that? Now, what I meant by that is that sometimes stock will do exactly the same thing over and over and over. In fact, it's not the stock doing it. It is because those who are trading that financial instrument, okay, the traders, the investors, they are trading that stock over the years, and they are doing exactly the same thing. Probably they are using the same trading system, the same trading strategy, and it has been going on all the time. So what I meant by the characteristic of that financial instrument is that you will see that some stock, their second area wave is always a zigzag pattern, or some stock, all right. So you may go a little bit into the past to check some stock, their second area wave is always a straight line down. All right, okay. So this is what I meant by the characteristic of the stock. So you want to go a little bit into the past and see the behavior of that stock over the year during that year. Okay, let me speak proper English because people say, Joy, where do you learn your English from? All right. Now, their behavior during the second Elliott wave. So probably it's this, all the time the same structure, one straight line down and goes up. Well, that's a good information. So using the past, behavior of that financial instrument can also help us to have a bit of idea whether that stock has a more chance to exhibit a zigzag during the second Elliott wave. If it has been doing it over a year, that's the first thing that should come into our mind, yes or no. So it's a good thing to use the characteristic of that financial instrument. In fact, I would say past a second wave history of that financial instrument. All right? So the last thing that can also help us to avoid that Elliott wave trading mistake or that zigzag second Elliott wave trading mistake, or to defend our Elliott wave trading strategies, okay, is to use just a top-down trading method. All right? So you hear me all the time talking about use the multiple time frame trading method, use the top-down trading method. So what do I mean by that? In fact, I need to refer a trader that asked me a question at Day Pro Traders about multiple time frame trading method. You'll find that video. I'll put a link for you in below your comment. So if I have time, I'll do that as soon as possible. All right, so you may check that video. Okay, so you can use a top-down trading method. So price. So you see your second Elliott wave, a pull back to the 50%, 61.8% Fibonacci retracement level of the second Elliott wave, sweet spot zone, bullish stock very often will turn around there, all right, and then you implement a top-down trading method to control the risk. So I'm going to say it again, all right, trader hate me for saying that, but allow me to say that, okay, you know it, what I'm going to say is that without using a top-down trading method, one is not trading like a pro, all right? So traders do not like that when I say that, okay. Now, use a top-down trading method, use different time frame trading method. If you pull back to a key level, use a top-down trading method, use different time frame trading method, set up, consider that as a trading setup on your setup time frame. Go to another time frame, wait for the signal is fired, all right, price going up. If you are already in the trade, it's going up, move your stop loss to secure some of your gain. So that's just simple thing. Because if stock you enter, you say you want to catch your third area where you enter here, okay? So you start going up, you are 100 pips up, at least move your stop loss 25 pips. So you don't lose much. That will help you to defend your position. You don't want to lose. If it's in profit, remember, in trading, when a winning trade turns into a losing trade, it affects that trader. It doesn't matter whether that trader does not have a heart or is a very experienced trader. It will affect you. It will affect you. Right? Myself personally, I hate that very much. Okay, you don't want to see all green and then suddenly turn red. All right, so secure your gain. So use a top-down trading method. All right, there's one more thing one can do to defend oneself about that method. Try to think of it 1 second. Just one more thing. So the zigzag pattern is an ABC pattern. Okay, can be a little bit messy. We use the internal wave for the first way to have a bit of idea. I talk about it. There's one more thing I forgot. This one, this is it. Is to buy above the high of the first wave. I remember now, my friend. All right, buy above the high of the first wave. Conservative Elliott wave traders that want to catch the third Elliott wave without too much stress will be very patient. Sometimes they miss the opportunity because they will wait for it to break above the high of the first wave. Okay, that's so probably brace above the high, retest. Sometimes you'll see that they probably do exactly that. You brace above the high, okay, and then retest it. And then you implement a top-down trading method above the high of the first wave. Okay, that can also help you, okay, to defend your Elliott wave strategy during the second Elliott wave. All right. I'm here. I'm writing something down because there's one more thing I want to say. So allow me to, below the low of the first wave. I'm here. Okay, so you can buy above the high of the first wave. So you say, all right, George, I hate to lose the third area wave. I will become a conservative area wave trader, and I will buy above the high of the first wave. Okay? Do you think that will be useful to you? Andrea Sioni. Beautiful name. That's a nice name though, Sioni. Is there a meaning for your name? Let us know in the comment section if you want to, okay? The last thing that we can do, all right, to defend our second area wave, okay, trading, or to defend our third area wave catching. Can we say that in English? All right. To enter the third area wave, because the whole idea, the whole discussion is about how to enter the third area wave at the end of the second area wave. If the second area wave is a zigzag pattern, as the zigzag pattern is developing, sometimes it's not clear to trader that this is going to be a zigzag. That's where the problem begins. So therefore, that's why we try to find out how we can go around that situation. All right. So the last thing that we can do, so to protect our third area wave entry, is if you have a deep pocket. Do you have a deep pocket? What do I mean? Do you have? Are you? When I say the word deep pocket, some traders say, George, I'm not a rich investor. All right. But what I meant, really meant by deep pocket is that are you trading for your client and you don't give a damn about losing? Now, we may have a trouble for saying that, but no. I don't mean what I said now, okay? Hedge fund, big financial institutions do care about their client, because if they are not making money for their client, the client will not come back to them and their reputation will be underlined. Therefore, their reputation is so important for them, they will do everything to make sure that their client get money. In fact, hedge fund put the same amount of money like their client. So if the client lose money, they also lose money. So they do care about their client. But what I'm saying here is to make you laugh a bit. So don't take it too seriously. Smile a bit, my friend. Okay? We are YouTube. All right. Okay, let's move on. I am in a very good mood this morning because I slept very well yesterday. So the last thing that we can say, talking about the deep pocket, so you are very rich, okay, you have a lot of liquidity in your disposal. What some investors or market participants are doing is that they see this first wave, all right? Probably they participate in the first wave. Maybe they are the one that generate the first wave. So they see the consolidation, they check the financial, they perform George specific, okay, Google Acid test. They are satisfied. They check the market itself. They want to buy. So they start buying, and the first area wave spring out nicely, the breakout wave. Okay. Because they know they are the one creating the trend, in fact, they like that financial very much, they know what's going on, okay? Now, as people, what I explained to you, that contrarian traders start selling during the second area wave, those, okay, investors that are buying, that have created the first wave, in fact, know that this time, the only way is up, okay? So, as it's pulled back like this, they will buy anywhere during the second area wave. That's what I meant by if you have a deep pocket, you can buy the financial instrument anywhere during the second area wave. And what they usually do, listen carefully, they will buy anywhere during the second area wave as the price pulling back, and they will place their stop loss below few pips below the low of the first wave. So that's the last thing that you can do if you have a deep pocket, or if you are, okay, the market participant that has created the first area wave. So that's the last thing. So some investor out there, they are the one creating the first wave. They are in charge of that stock move. So as people are, the dump money starts selling during the second area wave, they ignore them. They just buy. They keep buying. In fact, they keep buying because they were buying all over during the first wave. As it's coming down, like they just buy. And when they do that, they place their stop loss below the low of the first wave. There's one more thing that you can do. Use a call option, buy call option. I know that there are Elliott traders, I know some of them, that use call option. So they buy call option. So the only thing that they worry about is that the second Elliott don't take too long to form. If it takes too long to form, their call option will expire and they lose their premium that they pay for the call option during an uptrend, or buy or sell a put option if you think that, all right, we are in a downtrend and the second Elliott wave is a rally up. So you buy a put option. So another thing that you can do is to use options, call or put options during the second Elliott wave. So the instrument that you are using to participate in the second Elliott wave may help you to stay put until you get paid. That's the last thing that you can do. Ninth thing. So I told trader before, apart from the normal trading account, okay, you can have investment portfolio, which means you buy the stock and hold it. So comes rains or sun, you are still in a trade. All right, so you just wait. You say, I'm going to hold it 3 years, 4 years, 5 years in my investment portfolio. So you like the story about that financial instrument. You see the first Elliott wave. You check the S&P 500. You know that it's not in the fifth Elliott wave, that the market itself is turning from bearish to bullish. Now, another stock that you want to buy and hold is in the second Elliott wave. You see it clearly that that is the first wave. You go to Google Finance, you check the fundamentals, you are satisfied, you are happy, you check the sector, okay. You know what you are doing, you know that there is always a risk to buy, whether one is buying with an option or buy and hold, there's still risk. One can lose whether one is buying and hold. You are aware of the risk, so you say, all right, I want to give this one a chance, I want to buy and hold. So during the second Elliott wave, instead of using your trading account, you are using your investment account. That will also help you to defend yourself, okay, your third Elliott wave trading a position or investment position, okay. All right. So I hope, okay, I have answered your question. Most importantly, that I have understood your question. So if all the thing I've said so far has nothing to do with the question that you were trying to ask me, please refer to the first video you have watched, quote me what I've said, and ask your question again. And, well, if I can, that's interesting question, I'll come back to you again in another video or answer your question in the comment section straight away. I believe I have, okay, understood your question, and I'll give you a clear and neat answer, okay? So to go quickly through everything that I've said so far, my blah, 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 blah. By the way, I like the interaction at 24 Elliott wave. Give us the thumbs up if you like it. This is about saying, George, those are the type of video I'm interested in. Give us the thumbs down if you dislike the video to tell me that, George, those are not very good videos I'm interested in. But do not think that every video that we posted will be what you are expecting, because there are other traders may be interested in that video and you may not be interested in that video. Sometimes if you dislike a video, you may put a small comment to say, George, you were saying too many times okay, or something like that, or your English today was not at the point, all right? You need to go back to your classroom or something like that, all right? So I may know the reason why you dislike the video, all right? So your rating is very important for me, but I like the interaction that is going on right now at 24 Elliott wave. That's why I'm busy recording this video again today. So to go quickly to everything that I've said so far, so one is trying to catch the third Elliott wave, okay? But sometimes in order to catch the third Elliott wave, one should buy at the end of the second Elliott wave, all right? But if that second Elliott wave happens to be a zigzag pattern, it is a challenge for many area wave traders. Now the question is, how do we defend ourselves during that situation when the second area wave does not give us any warning that is going to be a zigzag pattern? So I'll give many examples, that strategy that one can use, okay, to protect or to defend oneself during that scenario. But if you have a better suggestion, put in a comment section so I may also learn from you. But the first thing that I can say to you, going quickly to everything that we have said, is that buy above the high of the first area wave. That's one way, okay? Pay attention to the structure of the A wave of the zigzag pattern. If it's 1, 2, 3, 4, 5 down, it's telling you that it's likely to be a zigzag pattern. Watch the B wave of the second area wave and secure your gain. So if this one happened to be 1, 2, 3 up and you buy it here, it's telling you secure your gain. It's likely to be a zigzag pattern. Okay. Attention to the second internal wave of the first wave, because we can use the second internal wave of the first wave to have a bit of idea what is likely to take place during the real second area wave. Okay. Also, pay attention to the characteristic of the financial instrument that you are trading, talking about the past second wave history of that financial instrument. Another way to defend oneself in that scenario is to just use a top-down trading method at each point. Signal fail, out. All right? You're looking for a setup, the signal, and the low-risk entry point. You enter, signal fail, out. Okay? This is about using a top-down trading method. Another thing that we can do is, if you have a deep pocket, as I explained to you before, you can buy anywhere and set your stop loss few pips below the low of the first area wave. Another thing that we can do is to use call option in an uptrend to control that situation, or to use put option to control that challenge during the bearish trend. And the last thing that I have also mentioned is about, buy and hold as an investor using investment, account instead of a trading account. All right? If you think that, George, you have not answered my question, or this is another blah, 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 well, let me know by giving us the thumbs down, okay? If you think this is an excellent video, all right, give us the thumbs down. If you think this is this is amazing video, George, today, feel free to share it on Google+, on Twitter, and on Facebook. This is the end of the tutorial talking about zigzag pattern. Area wave trader answers a specific question about a zigzag pattern. Happy trading to you all, and speak to you soon. Thank you for watching.